Some of you may be thinking, this sounds too great, but I'm too young to think about retirement. Or, this sounds too great, but I think I'm too late. It's never too early, and it's never too late. Here's the truth. Infinite banking works at every stage of life. For younger listeners starting, early gives you the longest your dollars can grow. Every contribution you make today can compound for decades to come. And during that time, you're not locking your money away. You still have access to it for emergencies, opportunities, investments. But maybe the most powerful part of this, you're training yourself to think differently about money. Instead of thinking like a spender or even a saver, you're learning to think like a banker, the one who's always in control of the flow of the money. That mindset shift is life-changing.
Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So today's episode is incredibly important for anyone who's thinking about retirement, whether you're 5 years away, 20 years away, or already there. We're talking about something most people don't fully understand until it's too late. How to protect your retirement income from market volatility. And joining us within this conversation is one of our amazing money mentors, Miss Tammy Smith. And Tammy has a gift just for simplifying some of these concepts and showing people how to create the stability, the predictability, and also the peace of mind, especially when the markets are all over the place. So if you've ever wondered what happens to my retirement if the market crashes, because matter of fact, just not too long ago, I was out in Arizona speaking at an event, and there was a gentleman, Rodney. And if you go to my Instagram or my Facebook, you'll see that video that I posted where Rodney shared this story with one of his colleagues who's in his 70s who had to go back to work because he had all of his money in the market. He retired, the market crashed, and now he don't have, I'll re-say that. Now he doesn't have any money to show for it, right? So this gentleman in his 70s is back at work, not because he wants to, but because he has to for the survival of it, right? Just to keep a roof over his head and put food on his table. Honestly, it's to the point that even this gentleman, he can't even drive himself to work just because of some vision impairments that he has. And so he actually has to have his neighbor take him into work every single day. And again, he's not doing it just because of joy and he likes to do it. He's doing it because he really truly has to. So if you've also been thinking to yourself, how do I make sure my income is stable for life? Or is there any safer way to grow and access my money? This is going to be the episode for you. So Tammy's going to be breaking it down with the truths no one's talking about and really sharing the strategies to keep your money protected, liquid, and also working for you no matter what the market is doing. So without further ado, let's get into the episode.
I want to thank Hannah Kessler and the Money Multiplier for giving me the opportunity to speak with you today. My name is Tammy Smith, and together we're going to dive into a topic that I was asked to cover on how do you protect your retirement income from market volatility. But before we get started, let me tell you a little bit about myself. I've been an entrepreneur my entire life, and for the last 18 years, I've worked in the financial world, helping people get out of debt, reach their goals, and take control of their money. Along the way, I've worn many hats and I've helped families purchase homes, I've worked as a real estate investor, and I've taken on a variety of ventures. However, about 9 years ago, I was introduced to a concept that I wish someone would have told me way earlier. It completely changed the way I think about money, and that's why I want to share it with you today. Because you know what? It's never too late to learn, and whether you're just starting your financial journey or approaching retirement, the principles we're going to talk about can make a profound difference. So with that in mind, let's dive in to how market volatility can impact your financial future and what you can do to protect yourself and your retirement. Most of us were taught the simple formula: work hard for 30 to 40 years, put that money away into your 401k or IRA or a brokerage account, let it grow, and then in retirement, you slowly draw it down. Sounds simple. But here's the problem: you don't actually control any of it. You're putting money aside every month. But if there's a downturn, that money can disappear almost overnight. If you need to access it before retirement age, it's often tied up and with penalties and fees and restrictions. And worst of all, your income depends on how well Wall Street performs, not on when you need it. So let me ask you, how does that sound for your retirement? Sounds kind of unpredictable, stressful, and out of your control. The reality of market volatility: markets don't move in a straight line. They go up one year and they go down the next. If you're young and you're still working, you can ride it out. You've got decades of things to recover. But if you're retired and pulling money out, volatility becomes a real danger. Every dollar that disappears in a down year is a dollar that's no longer compounding for you. And once it's gone, it's gone. This is what we all call the sequence of return risk. So here's an example. Two retirees, both starting with $1 million, each plan to withdraw $50,000 a year. Over time, they both earn the same average return. But the first retiree enjoys strong early years in the market, while the second experiences losses right away. By year 15, the second retiree could be completely out of money, while the first still has a healthy nest egg. Same average return, completely different outcomes. Why? Because timing matters. Think back to 2008. Retirees who had just left the workforce saw a 30 to 40% of their portfolios vanish, yet they still had to take income. They had no choice but to sell assets at a loss, locking in damage that they would never recover from. In 2020, the pandemic hit. The market dropped 30% in a matter of weeks. Yes, it recovered quickly, but what if you needed money in April of that year? That panic wasn't just headlines. It was retirees losing sleep over whether their income would last. Let me walk you back even further to my own story. In 2001, we had a retirement account. Like so many others, we were following the traditional advice: save, invest, and let it grow. But we made what some people thought was a pretty crazy decision. We cashed it in. We purchased a franchise. Not only that, we bought a women's professional football team. Now, the timing was wild. The very next week, after we pulled that money out, the market took a dip. And suddenly, we were watching friends and family lose thousands, some of them tens of thousands, right out of their retirement accounts. The only thing that kept us sane at that time was the fact that we were in control. Instead of staring at a statement, wondering what happened, we could actually see where our money was and where it was going. We could watch the team, we could watch the franchise, and we could track what the money was doing every single day. Looking back, I only wish someone had told me about infinite banking back then. Because while the football team gave us some control, infinite banking would have given us not just control, but stability, growth, and peace of mind without the risk of the market's ups and downs. Market volatility is a real risk that knowing ways to protect yourself can be key. Let's look at 3 of the most common strategies that financial advisors recommend as you approach retirement. Bonds. For decades, the advice was simple: shift more of your portfolio into bonds as you get older, because bonds were supposed to be safe. And maybe that worked in a different era. But today, bonds don't pay what they used to. With interest rates bouncing around and inflation eroding all of our purchasing power, many bonds don't even keep up with the rising cost of living. So while your money may feel safe, it actually is losing ground quickly, year after year. And that's not safety, that's erosion. Annuities. Annuities are another common solution. Yes, they provide guaranteed income, but at what cost? The fees are often high. You lose flexibility, and the moment you hand your money over to the insurance company, it's basically no longer yours. You've traded that control for a promise. And there's one thing retirees crave most, and it's not a promise, it's control. And then we have diversification. We're told, don't put all your eggs in one basket. And of course, diversification is important. But here's the hard truth. It doesn't eliminate risk. Think back to 2008. Stocks, real estate, commodities, even international markets, they all fell together. Diversification spread the losses around, but it didn't protect anyone from the pain. And like spreading your eggs across multiple baskets, but all of them still end up on the same truck, and then that truck hits a pothole, the bottom line is each of these strategies can play a role, but none of them give you what truly need: control. They all leave you at the mercy of forces you can't control: interest rates, market cycles, global events. And isn't control exactly what you want in retirement? After all, this is your money. Shouldn't you be the one calling the shots? So let me ask you, what if your money wasn't the money at risk in the first place? Well, that's where infinite banking comes in. Through specially designed whole life policies, you create your own banking system. And here's what that really means for you: guaranteed growth every single year. No matter what the stock market does, your policy value grows. That certainty alone can change the way you sleep at night. Dividends on top of that growth. These aren't promised, but many mutual insurance companies have been paying dividends consistently for over 100 years, even through wars, recessions, and the Great Depression. Liquidity. You have access to your cash whenever you need it. No waiting until you're 59 and a half, no begging a bank for a loan. It's your money on your terms. Flexibility. You can use it for anything: expenses, opportunities, investments. Want to buy a car? Finance it through yourself. Want to grab a real estate deal? Your cash value is ready. Need to pay off debt? Use the system instead of draining your savings.
Hey, money multipliers, pardon the interruption, just really quick. I want to get real with y'all. If you've been carrying around this weight of your financial life by yourself alone, the stress, the confusion, that feeling that you should be farther ahead than where you're at right now, you don't got to keep doing things the hard way. Money Game Live in Tampa, this is a space where people come to finally break free, to rewrite their money story, to stop surviving and start building the life they know that they're meant for. And I'm telling you that something powerful happens when you get into a room of people who are done playing small, who are ready to take back control of their future. You see what's possible. You get the clarity. You meet the people who have done it and been there before. And then you start to feel the hope again. But Tampa is just a couple of months away. It's coming up very, very close, and seats are disappearing. So if this is something that's been kind of whispering to you, hey, I need this, listen to that gut feeling. So go snag your tickets, moneygamelive.com, and give your chance just to breathe again, to grow, and just to believe in yourself. So this is going to be your breakthrough moment, and all you got to do is just show up. And as my yoga teacher always says, showing up is 50% of the work. I will see all of you money multipliers in Tampa.
Tax advantages. The growth inside the policy is tax advantaged, which means your money compounds more efficiently and that you get to keep more of what you earn. And here's the best part. The earlier you start, the more powerful it becomes. Every dollar gets more years to compound. And even while you're using your money, whether that's for a car, paying off debt, or investing in real estate, your policy keeps growing as if you never touched it. Think about that. With traditional savings, once you spend the money, it's gone forever. But here, you can use your dollars and grow them at the same time. That's the real power of infinite banking. Now think about it. Think about how most people handle their money, especially when it comes to using cash. You pay cash for a car. That money's gone forever. You pay cash for real estate. That money, it's gone forever. You pay off debt. That money again is gone forever. In each of these cases, it feels like you're doing the right thing. You're avoiding interest, you didn't borrow, you paid in full. But here's what most people miss. Once you hand over those dollars, they're gone. They're not just the cash itself, but the future growth of that money. That's what we call lost opportunity cost. Think of it like this. Every dollar has two jobs it could be doing: buying what you need today and continuing to earn for you tomorrow. When you pay cash, you've sacrificed the second job. You've given up not only the dollar, but also the compound interest it could have been building for the rest of your life. Here's a simple way to picture it. If you spend $30,000 in a car in cash, it's not just the $30,000 that you lost. It's the 60, 90,000, or even 120,000 that same money could have grown into over time. That's the hidden cost that nobody talks about. With infinite banking, you keep your dollars doing both jobs. Your cash value keeps compounding as if you never touched it, while you finance the purchase through yourself and pay yourself back with interest. That's how you take back control of the banking function. Now, some of you may be thinking, this sounds too great, but I'm too young to think about retirement. Or, this sounds too great, but I think I'm too late. It's never too early, and it's never too late. Here's the truth. Infinite banking works at every stage of life. For younger listeners starting, early gives you the longest your dollars can grow. Every contribution you make today can compound for decades to come. And during that time, you're not locking your money away. You still have access to it for emergencies, opportunities, investments. But maybe the most powerful part of this, you're training yourself to think differently about money. Instead of thinking like a spender or even a saver, you're learning to think like a banker, the one who's always in control of the flow of the money. That's the mindset shift. That mindset shift is life-changing. For those nearing retirement, even if you only have 10 to 15 years before retirement, it's not too late. A policy can still create stability, guaranteed growth, and serve as an income buffer. Think about it. Those 10 to 15 years are going to pass no matter what. Would you rather reach retirement with another decade of market risk or a decade of safe, predictable growth and liquidity that gives you options? Banks make money because they control the flow of money. Every time you take out a loan, swipe a credit card, or pay interest, the bank wins. Infinite banking puts you in the same seat. You become the one in control, not Wall Street, not the banks. So here's a scenario. Sarah, at the age of 35, started her infinite banking policy. Over the years, she used it to finance cars, pay for a down payment on her home, and pay off student loans. Her cash value kept compounding, and she paid herself back with interest. Fast forward 20 years, Sarah has both traditional investments and a large volatility-proof pool of capital in her policy. When markets dip, she doesn't panic. She taps into her cash value, letting her investments recover. David started at age 55. He worried it was too late, but redirecting money he was already using for debt payoff and big purchases, he built a policy that became his income buffer. When the market stumbled, he didn't have to sell investments at a loss. He pulled them from his policy instead, protecting his retirement nest egg. Business owners can also use this. One of my clients is a small business owner and used infinite banking to smooth out his cash flow. Instead of relying on a bank line of credit with interest rates and fees, he couldn't control those, so he borrowed from his policy, paid himself back, and kept the growth inside his system. Now you're thinking, what do I do next? Education. Learn the mechanics, how the policies are designed, how loans work, how cash value grows. A great place to start this is by reading Nelson R. Nash's book, Becoming Your Own Banker. We would love to help you find a copy if you need to, but they're readily available on Amazon. Redirect your dollars that you're already using. Think about where your money is going. Cars, debts, purchases. Those same dollars can be redirected into a system that pays you back and compounds for life. Integrate this into your financial life. This isn't something that you're going to want to wait to use until retirement. Use it now for financing, for opportunities, and control. Every time you do, you eliminate the hidden cost of cash and stop sending interest to someone else's bank. With infinite banking, you are the bank. So here's what I want you to remember. Market volatility will always be there. We can't control it. It will rise and fall, and none of us know when the dip is coming. Traditional solutions, they don't give you real control. Bonds, annuities, diversification, they each have their place, but they still leave you tied to forces you can't predict. Infinite banking creates certainty, liquidity, and peace of mind. It gives you guaranteed growth, access when you need it, and the ability to use your money without interrupting its compounding. You don't have to rely on Wall Street. You don't have to sit on the edge of your seat hoping that the market is going to cooperate with your retirement plan. With infinite banking, you build your own system. You become your own bank. And instead of paying interest to someone else's bank, you get to pay yourself. That's how you take back control over your money, your income, and your future. If this resonates with you, I'd love to help you take the next step. Head over, schedule a call, and let's explore how infinite banking can supercharge your retirement income and give you back control. Thank you again, Hannah Kessler and the Money Multiplier, and all of you for joining me today. My name is Tammy Smith, and until next time, stay in control, be your own bank, and protect your future.
What an incredible conversation with Tammy Smith. So the reality is retirement shouldn't feel like you're gambling, and you've worked hard for your money and you deserve a strategy that keeps your income stable, predictable, and protected from every market storm. Notice even, I'm going to do a quick plug here for my children's book, The Companion. You can go to companionbook.com and grab a copy of it. But that's one of the analogies that we use is slaying the dragon. Her girl and her companion go off and slay the dragon, and the dragon is market volatility. You know, her sword is her policy loans, the shield that she uses when she goes and fights in battle, that's her policy protecting her and her companion. So this is why the infinite banking concept is just such a powerful tool. It gives you a place to store your money safely, access it on your own terms, and grows your money without the fear of losing value in a downturn time. So it really takes the uncertainty out of retirement and replaces the control back to you. So if today's episode really opened your eyes, you want to understand exactly how this can work for you, go to our website, themoneymultiplier.com, watch the presentation there, and schedule a call with myself, with Tammy, another money mentor on the team, and we're going to make sure that all of your questions are answered and get specific into your own strategy. So make sure, subscribe to the show, leave a review, 5 stars, and leave a comment down below. I want to hear from you, and share this episode with someone who deserves stress-free retirement. So until next time, just remember, security comes from control, and control comes from knowing where your money lives. I will catch you money multipliers next week. Until then, see y'all. Thank you, Money Multipliers, for tuning in to another episode. If you enjoyed this and you want to learn more about the infinite banking concept, click right here. This takes you to my powerful 90-minute presentation explaining in depth how, why, what is the infinite banking concept. I will see you next Tuesday. Catch all you Money Multipliers then.